Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. It is April 11th. Today we're going to take a look at one out of the industrial sector, Fastenal, industrial and construction supplies. Let's jump right in. And if you are new to the channel or you'd just like to help me out, and it really does help out a small YouTube channel like mine whenever you do this, go ahead and hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hopefully you're on your own investing journey as well. Hit that notification bell so you're notified whenever we put out any new content. And drop a comment down below. Let me know what you think of Fastenal. What are you investing in right now? How is your portfolio doing? Bit of a pullback this week, at least in mine. Looks like the market overall is seeing a bit of a pullback, which isn't surprising. Over the last several weeks, we've had a significant run up. So usually after you have a significant run up, you have a bit of a cool down period. We also are heading into May. Usually there is a saying that goes from year to year, sell in May and go away. As we enter into summer, a lot of people sell out of positions where they may have made a significant amount of gains and wait until summer's over to jump back into the market as we enter into fall and winter. We'll see if that sell-off, that pullback continues over the next couple of weeks as we head into May. I am kind of anticipating a bit of a slowdown here, and we are also in an election year, so typically people will be waiting until we get closer to election. Maybe the polls start to shake out who might be the winner. And then obviously once we find out who does win, things should go back to relatively normal. At least that's what we all hope. So let's keep going here. I'll get off that soapbox for a minute. But again, hit that thumbs up. Make sure you're subscribed. Hit the notification bell. That really does help out a small YouTube channel like mine with the YouTube algorithms. And I really do appreciate it to those of you who have taken the time to do so. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. Just because it meets 5 of 8 or 6 of 9 if it's a bank, financial company, does not necessarily mean I'm investing. It may go on my watch list, and then I do more of a deep dive, do a discounted cash flow analysis or another analysis to see what I'm willing to pay, and then wait for the price of the company stock to fall into that buy range. It's also how I check on a company in my portfolio to make sure it still meets the criteria that I've set up. If it doesn't, then maybe it's time to start watching that one a little more or removing it from the portfolio altogether if things have changed with the company. So just because a company meets the criteria initially, you should be looking at it from time to time. I try to look at mine at least once a year, if not a couple times a year, to make sure they are still meeting my investment criteria, still growing, haven't changed their business fundamentals in any way. And if they have, it may be time to sell them or pull them out of the portfolio. Now back to Fastenal, and if you want to check them out, www.fastenal.com is their homepage where I pulled this information from. That's www.fastenal.com. That is their homepage. Who we are: organizations partner with Fastenal to simplify and secure the supply chain for a vast range of industrial products. By executing daily needs and optimizing supply chains performance, we help our business partners create more value more efficiently. And here are some of the items that they provide: fasteners, safety material, equipment, gloves, glasses, hard hats, janitorial and cleaning equipment, tools and equipment, cutting tools and metalworking, material handling, lifting and rigging equipment, abrasives, electrics like cutting wheels, sanding paper, electrical material and equipment, adhesives, sealants and tapes. That is what it is. Pneumatics for plumbing and piping, HVAC and refrigeration, hardware and building supplies, lubricants, coolants and fluids, paint and painting supplies. So everything around the construction and the industrial industry, they provide a lot of the products that the manufacturers and construction companies are working with and installing in your home, in your businesses, out there in the world. Now, the reason we're taking a look at them, down 6.5% on the day. We are talking about Fastenal Company, ticker FAST, out of the industrial sector. Closed out the day at $69.88. 52-week range as low as $50.30, as high as $79.04. They are closer to their 52-week high than their 52-week low, though maybe they are starting their trend back down. Market cap of $40.001 billion, a beta of 1.03, so just slightly more volatile than the overall market. You can see that volatility throughout the day here. Price to earnings PE ratio, in my opinion, this is elevated, $34.59. EPS, earnings per share, sitting at $2.02. For PE ratio, the market average is right around 21 PE. So this is high, and this would be in line with like a tech company, a fast-growing company, you know, high revenue, high margins. And Fastenal may have high margins, but I don't know how fast they are growing currently. They've been around for a while. That's one I'm well aware of and have been for years. Earnings date April 11th. That was today, so I am assuming that something in their earnings report reflected negatively, whether that's their future outlook, whether they didn't hit their numbers. You'd want to check that out. I'm not covering that here. I'm just looking at the company on a high level, but there was an earnings date today, so you probably want to look at that if you're interested in this company or if you own it. For dividend yield, $1.56 paid out on the year. They are quarterly payers, so divide by 4, though we'll see that here in a little bit. Dividend yield, decent dividend yield starting at 2.09%. Ex-dividend date, January 31st. They did pay out February 29th. So if you were to buy them now, you would be in line for their next payout, but you'd have to wait a couple more months. And Yahoo Finance has a one-year target estimate of $67.41. So that's a little bit lower than where they currently sit. So they see it coming down a little bit more. I'm not affiliated with Yahoo Finance, just one of the sources I go to for information. Now, if you were to go to Yahoo Finance and look over here on the left, just on the left-hand side of the graph, you'd see a lot of tabs you could click, you know, the financials, the analysis. We are going to look at, under the statistics tab, we're going to look at dividend yield theory to see if this one is potentially undervalued. To do that, again, you click on the statistics tab, you go down to dividends and splits, you look at 5-year dividend yield average at 2.29%, you compare it to its current 2.09, or over here, forward annual dividend yield. The current is the forward, right? So numbers are usually forward looking. It's 2.09%. So since 2.29% is higher than their current 2.09%, that speaks to overvaluation. These are inversely correlated. So if this was higher than their 5-year average, that would speak to undervaluation. But currently, right now, at least according to dividend yield theory, this one is potentially overvalued. Payout ratio, I like 75% or lower. They got it at 69.31. We're going to see a little bit of discrepancy here between this one and stockanalysis.com. Again, I like 75% or lower, so this would meet it here according to Yahoo Finance. I think it's a little bit higher than I like on stockanalysis.com. We'll split the difference, call it 73, 74% right in there. It's right at what I would call acceptable at 75% or less. Now, we're going to take a look at the financials. Again, if you were to go over here on the left, you'd find the financials tab. You click on the financials tab. We're going to look at free cash flow. As a dividend growth investor, I want growing free cash flow because typically if a company has growing free cash flow, they have growing dividends to match. Now, 2020, $933 million. 2021 dropped down to $613 million. 2022 back up to 767, and a big jump up in 2023 to $1.2 billion. They are sporadically also buying back shares here. So overall, free cash flow growth, at least over the last 3 years, bit of a drop there in 2021, but right back to it. They may have had I don't know what, write down, a sell off, something like that. I'm not sure. I'd have to go back and look, see what was going on between 2020 and 2021, though it just may have been a slowdown in sales. But repurchase shares, looks like every other year. We'll have to see what they do in 2024, but overall growing free cash flow. So good to see. Now I'm going to jump over to stockanalysis.com, another source that I like, and I recommend picking more than one source, at least 2, if not 3 sources, so you can make sure the information you're getting is accurate and up to date. And they have 4 stock analysts that have taken a look at this. They call it a consensus hold. They have a low estimate of $50, which would be a 28.52% decrease from where it currently sits, and that would be right up against their 52-week low. Average estimate of $67.75, which would be a 3.15% decrease from where it currently sits, and is right in line with what we saw with Yahoo Finance. And a high estimate of $85, which would be a 21.52% increase from where it currently sits, and the only way, based on their forecasts, that you would see any price appreciation on this one. Now we're going to take a look in the statistics here, look at return on equity and return on invested capital. I like 10% or better for these numbers, and these numbers are very good for Fastenal. Return on equity, 34.3%. Beats the 10% I'm looking for. Return on invested capital, 29.87%. Again, almost 3 times what I'm looking for there. Very good numbers overall. Was a little disappointed that I did not see their forecasted EPS growth. I like 5% or better. So this one you need to do a bit more research to see what they're forecasting for their EPS growth. And revenue growth, very high, 8.03%. Very good revenue growth forecasted on this one. Now let's take a look at the dividend history. They are a quarterly payer. They pay out on the March, May, August, November time frame. A lot of companies do. Payout ratio, again, they're showing 77.23. Yahoo Finance showed 69%. Again, I split the difference, call it 74, right around 75%, which is right at the 75% or less I'm looking for. So it does give them a little bit of room to increase the dividend, and they are increasing the dividend significantly, 12.68% dividend growth on this one with 25 years of growth. Buyback yield 0.45%, shareholder yield 2.67%. Going back to October 2021, they were paying 27 cents and some fractions of a penny, not quite 28 cents. They raised it up February 2022 to 30 cents, raised it up again February 2023 to 34 cents and some fractions of a penny, and most recent jump up was actually in December of 2023. So it looks like February, and then for whatever reason they raised it up a little bit early in 2023. So I would anticipate perhaps they raised it up again in January to 39 cents. So they've had some significant raises here over the last year and a half. That's probably why we've got this 12.68%. So good to see that they're rewarding shareholders on this one. I'm not sure if they're going to raise it up again this year, but you might be on the lookout for another penny raise sometime this year, especially if they follow suit and raise it again in December like they did last year. We'll see. Let me know if you have this one down in the comment section below. And that is really it. This is the last Stock Pick of the Day series for this week. So tune back in on Sunday morning. I will have my portfolio update. I do that every Sunday morning where I'll show you what I bought, what I added to my portfolio, anything I might have sold to my portfolio, any option plays we were in for the week, any dividends paid out. Tune back in again. Make sure you hit that subscribe button, hit the notification bell down below. Drop a comment. Let me know what you think of the channel. And if you haven't done so already, don't forget to show me some love and hit that thumbs up. Again, ring the notification bell, hit the subscribe button, drop a comment. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So you have a company like Fastenal you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you on Sunday for the portfolio update. Again, don't forget to hit that subscribe button, hit that notification bell. We'll see you on Sunday morning. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.